Good morning, good morning, good morning. How are you doing today? Good morning. I believe you can hear me. How has it been? How was trading yesterday? Hope it was profitable. How are you doing? Can you hear me? If you can hear me, I want to see your comments. Can you hear me? Can you hear me? I also wanted to confirm the view. Is it on landscape mode or portrait? Please, I would like to know. I would like to know. Is it on landscape mode or portrait? I would like to know. Good morning, good morning. Good to have you in today's session. You're welcome. Can you hear me? Can you hear me? Can you hear me? Can you hear me? I want to see your comments. Can you hear me? Can you hear me? Can you hear me? Can you hear me? I want to see your comments if you can hear me. You know how we do it. If you have any question, drop it in the comments section. If you have pair you want me to analyze, you want us to look at, please drop it in the comment section. You're welcome. You're welcome. You're welcome. So, as you know, we'll start by looking at the calendar. What fundamentals, what news are we expecting today? And from which country is the news coming from? Very important, you know, the news that will be released from the different countries. Very important. So today is Tuesday, 25th, and we are expecting CPI from Canada. CPI, that is Consumer Price Index. Consumer Price Index will be released by 1:30 for card. Okay, so let's see the forecast value. Um, the previous was 0.5 and the forecast value is 0.3%. So they are expecting a decrease. Okay, they're expecting a decrease. So what we're waiting for now, what we're waiting for is the actual value. So if the actual value is higher than the forecast, it will be positive for the for card. If the actual value is less than forecast, it will be negative for card. So let's say you want to trade USD card. If the news is positive for card, you would have to sell USD card. And if the news is negative for card, you would have to buy USD card, because if it is negative, it means card will lose value and dollar is likely going to gain value. Are you with me? Okay, so median CPI, okay, forecast and previous is the same thing. Let's see trim CPI. Trim CPI, they're expecting a decrease in trim CPI. Okay, so let's wait for the by 1:30, and by 3 p.m. consumer confidence data will be released from the United States. Consumer confidence by 3 p.m. So let's say the forecast. Okay, the previous was 102.0. The forecast is 100.0. So they are expecting a decrease. They are expecting a decrease. So if the actual is higher than the forecast, that will be good for the dollar. You would notice gold has been in a range since yesterday, and I think the reason is this news that will be released today, consumer confidence. Okay, so that will determine the direction for pairs that have USD as the. Okay, so by 3 p.m. we are expecting a major news from the United States, and that is likely going to determine if markets will be volatile today. That's when you should expect volatility in the market. 3 p.m. for USD pairs. That is when you should expect high volatility in the market. Can you hear me? Can you hear me? How is the video at your hand? Precious says it's blur, right? It's not clear at your hand. Ensure you're using the highest resolution. The highest resolution. Go to the settings and change the resolution if it is blur at your hand. How is it at your hand? How is it at your hand? I want to hear from others. It's blurry too from Chris. It's blurry. Wait, is it what you're viewing? Is it in landscape mode or portrait? Is it portrait or landscape? I'd like to know. Is it in the portrait mode or landscape mode? like to know, Mr. Precious. Portraits. I don't know why it's supposed to be landscape. I think that's where the challenge is. Please, we'll manage it. I don't know what YouTube did. I didn't see that option to use on landscape. That option wasn't available this morning. I don't know why. I don't know why. So please, let's just manage this. Let's just manage this. I don't know why that option wasn't available this morning. I don't know why. I don't know why. Let me check settings. Let me see. They changed something between yesterday and today. Can't find that. Ah, YouTube. What's up? Please, let's just manage this, okay? Please, it's supposed to be landscape. Let's just manage this, please. Let's manage this, please. So let's go to the chat. If there's any pair you want me to analyze, please drop it in the comment section. If there's any pair you want me to analyze, please let's just manage this, please. Let's manage this. If there's any pair you want me to analyze, just drop it in the comment section. Drop it in the comment section. Okay, so I'll start with GBP USD. I told you guys yesterday GBP USD would be bullish yesterday, right? I told you guys GBP USD will be bullish yesterday, and you would see since the open of the market yesterday, GBP USD has been bullish. How are you seeing the chart? How is the chart at your end? Is it okay? Is it okay? How is the chart? How is the view at the end? Okay, we'll look at Euro Aussie. So GBP USD has been bullish. Now let me start with the daily time frame. As you can see, yesterday candle closed bullish, and on Friday what we had was a spinning bottom. Now after the close of a spinning bottom, a bearish spinning bottom, we should wait for the next candle to close bullish, right, for us to buy. And as you can see what has played out here, Friday candle closed as a spinning bottom, yesterday candle closed bullish. This tells me that there is more demand than supply. There is more demand than supply. So I would suggest, if you are considering trading GU today, you should consider buying. The only time I would consider selling GU, the only time I would consider selling GU is when GU breaks this low, this support, or the low of Friday. That's when I will consider selling GU. Or, okay, it's either that demand zone or support zone is broken, or after the close of, let me go to the weekly. I think last week candle closed as a shooting star. Okay, it closed as an inverted hammer. After the close of this inverted hammer and the previous week candle, you can see the previous week candle was a shooting star, right? And last week candle closed as an inverted hammer. After the close of these two candles, I believe a fair value gap was created. I believe a fair value gap was created. Now let's go down to lower time frame. Let's go to daily. Now on daily, we had this fair value gap here. This gap. This is a fair value gap on the daily, right? And you can see price pulled back and filled that gap before price went bearish on Thursday. You can see that. Now, after the formation of this, you can see we had what looks like a shooting star. That should be on last Wednesday, this candlestick, right? After filling this gap, a shooting star formed, right? So let's go down to 4-hour time frame after the formation of that shooting star. Do we have a fair value gap? Was a fair value gap created? Now you can see a fair value gap was created on 4-hour time frame. Can you see this fair value gap? It was created on 4-hour time frame. So I'm expecting price to fill this gap before going bearish. You can see price has not filled this gap. You can see. So this is an area I would consider selling GBP USD, or price breaks this support. But right now, the buyers are still in control. I cannot jump in and start selling. Are you with me? Also, if you go back, you would see we still have a fair value gap here on 4-hour. This gap that is yet to be filled. Can you see this? So there's a high probability they might push price up to fill this gap before going bearish. So this will be my next area of interest. This will be my next area of interest. So if they successfully break this zone, if a candle closes above this zone, there's a high probability they will aim for this next area of imbalance. Okay, this fair value gap. So if a candle closes above this level, then we should be aiming for this next area of imbalance. Are you with me? So that's my take on GBP USD. If you are considering selling GBP USD, wait for price to break out from this support. Wait for price to break out from this support before you consider, or wait for price to test this fair value gap or this fair value gap before you sell. That is my take on GBP USD. I'm thinking before the major news will be released by 3, they're going to push price up to this level or clear this area of liquidity or come and fill this gap. Expectation on GU before consumer confidence is released. I think that's what is going to play out before consumer confidence data is released. That's my take on GU. For today, I'm still bullish on GU. I'm still very bullish on GU. I hope that is clear. I hope that is clear. So that's my take on GU. Let's look at gold. Gold, I told you guys yesterday, my bias for gold was bullish. Though I took a scalp trade, I sold gold yesterday and I made, I think about 29 pips on that trade. I made 29 pips on that trade. Though it went in direction, made close to 100 pips, but it pulled back and I was able to close 29 pips on gold. Sell yesterday. But if you joined the weekly session we had, I told you guys I'm expecting gold to come and fill this gap. This gap should be filled. If it does not fill this gap, at least it should pull back to 50%. Apply your Fibonacci. If it does not fill this gap, it should at least pull back to 50%. That's my expectation on gold. Are you with me? That's my expectation on gold. It should pull back to Fibonacci level 50%. That is the area, the first area I would consider selling gold, depending on the candlestick pattern that will form at that level, at that 50%, at that equilibrium level. If a bearish reversal pattern forms at that level, or I'm able to identify a bearish structure, or maybe 1 hour time frame or 15 minutes time frame, I could consider selling at equilibrium. But if price breaks that level, closes above that level, then there is a high probability that they would come fill this fair value gap, or you call it liquidity void. Okay, so that's my expectation on gold. I'm still hoping, I'm still expecting. As you can see, I took this trade yesterday. I bought gold yesterday, I think around 3 or 4 p.m. and you can see the trade is still active. You can see I executed this trade yesterday. Okay, and it's still active. My target is my first TP is about 150 pips, and you can see the market went against me. I saw a drawdown of negative 70. I didn't close the trade. So right now I think it's in small profits. So right now, if you want to take any risk on gold, it will buy. What would have been the best entry for gold this morning for today's market? What would have been the best entry? Now let me go to daily time frame. Let me start with daily time frame. Why my bias for gold today still remains bullish. Let's see how yesterday candle closed. Yesterday candle closed bullish, right? You can see it. It closed bullish, strongly bullish. And for me to consider selling, I would have to wait for the low, the resistance to be broken. The fact that yesterday candle closed bullish is an indication that we have more demand. We have more buyers, right? So I should be looking for buy opportunities today. I would only consider selling if the support is broken. If the support is not broken, I will not sell. The only area I would also consider selling is that fair value gap or 50% level. That is the area I would consider selling. But in as much price has not hit 50% or fill that gap, I will not sell. So price must hit 50% level or fill that gap, or price breaks this support that formed yesterday. If a candle closes below that support, that's the confirmation that we have more sellers than buyers. Now, if a candle closes below that support, I would wait for price to pull back and retest that support that has become a resistance. Or most times, when that support has been broken, a fair value gap will be created. or maybe 4 hour or 1 hour time frame, I would need to wait for price to pull back and fill that fair value gap before I will sell. I hope you are with me. Are you following? If you are following, please, I want to see your comments. I want to see your comments. Are you following? Are you getting value from this stream? If you are getting value, like this stream right now. Like the stream right now. If you are getting value, ensure you like this stream. If you are getting value from this session, okay. So my buyers on gold today, like I said, what would have been the best time to buy gold today? What would have been the best time to buy gold today? Now, if you go down to let's go down to 4 hour. After the close of yesterday candle, what pattern do we have on 4 hour? That's the next thing we need to consider. After the close of yesterday candle, what pattern do we have on 4 hour? Let's go down to 4 hour. Now, if you look at 4 hour, you would see that we have from this point, this was last week, we have a spinning top. These are bullish reversal pattern, right? These are bullish reversal pattern. Can you see that? And look at this 4 hour candle, the previous 4 hour candle. It closed as a spinning bottom, or you want to call it inverted hammer. It closed as a spinning bottom. Let's call it spinning bottom. The previous 4 hour candle closed as. You would also notice here that we had a support here, a resistance which became a support after the formation of this doji. A resistance formed at this level, which became a support after this candlestick broke out from this level. It became a support. So what happened? Price came back, tested that broken support or resistance, which has become a support, and what pattern formed at that level? A reversal pattern, a bullish reversal pattern, right? A bullish reversal pattern. Now, after the formation of a bullish reversal pattern, this is a spinning bottom, which is a bearish spinning bottom. Now, after the formation of a bearish spinning bottom, you are expected to wait for the next candle to close bullish. You can't just jump in and start buying, because that the body closed bearish indicates that we still have few sellers in the market. So you don't want to jump in and start buying. You have to wait for a candle to close bullish. You have to be sure there are buyers in the market before you buy, right? You don't jump in when the candles that are printing are bearish, bearish, bearish. No, that's why I don't use pending orders. I don't use pending orders. I need to see the candle, I need to wait for the candle to close to be sure that it closes bullish if I want to buy, or closes bearish if I want to sell. Are you with me? So after the formation of this spinning bottom, let's go to, now if you don't want to wait for the next candle to close on 4, as a day trader, you have to learn how to use different time frames. Are you getting me? Because if you have waited for 4 hours to close, now you can see price has already moved on 4 hours. So you need to know how to use lower time frames, 5 minutes, 15 minutes. You need to know how to switch those time frames so that you can enter or catch the trend at its early phase. With that, your risk will be less on that trade and your reward will be very high. So after the formation of this spinning bottom, let's see the pattern that formed on 1 hour. What pattern formed on 1 hour? So you can see on 1 hour. You can see on 1 hour, what do we have here? This was the last candle after the formation of that, what's it called? After the formation of that spinning bottom on 4 hour. See what we had on 1 hour. This was the pattern on 1 hour. This 4 candlestick, 1, 2, 3, 4, makes up that 1 candle on 4 hour. That spinning bottom. These 4 candles. And what has played out here, you can see, if you go back here, you can see this area was a support zone. You can see this area was a support zone. Price came back, tested this zone. Can you see that? Tested this zone and there was a strong rejection. Now, after the close of that spinning bottom, we had resistance here. You can see this resistance. You can see this resistance. We had a resistance here. And what happened? This candlestick closed above that resistance. That tells me that demand is higher than supply. We can say price was in a range, right? From this point to this point, price was in a range, and this candlestick broke out from that range. Demand has exceeded supply. So this would have been the best entry using the 1 hour time frame. But if we go down to 15 minutes time frame, you would have gotten a better entry. If you had gone down to 5 minutes time frame, you would have gotten a better entry. So this would have been a good entry using 1 hour time frame. Let's go down to 15 minutes. So on 15 minutes, what do we have here? We had resistance here on 15 minutes. This would have been a good entry on 15 minutes, okay? You see this resistance? Immediately this candlestick closed above this resistance, that would have been a buy for gold. That would have been a buy for gold. So gold at the moment is bullish. If you want to take any trade on gold right now, it has to be buy. But consider the risk involved. Please consider the risk involved before you execute a buy trade. If you buy from the current market price, that is 333, 23333, and your stop loss, if you are buying from the current market price, your stop loss will be at this level. This area is an area of liquidity. They are coming back for these lows. I'm sure of that. They are coming back for this low. That might happen after they filled the gap, the fair value gap. That's the buy side or imbalance. After they fill that level, maybe that's when price will, but they are still going to come for this. I'm sure of that. So if I'm going to sell gold, if I see a sell setup at equilibrium or after that value gap has been filled, my TP will be at this level. My TP, they are coming for this area. This is an area of liquidity. There are a lot of stop losses residing at this level. They are coming for this area. So what I need to wait for is a bearish reversal pattern to form at equilibrium or fill that fair value gap, the buy side fair value gap. That is when I would go bearish and I'm going to sell, and this will be my final TP. My final TP. Not my first TP. My first TP is between 100 to 150 pips. That's my first TP. This could be, from the entry to this point, could be like close to 300 to 400 pips. So immediately, once the market gives me 150 pips, I close 50% of my trade. I close 50% and let the remaining 50% run to whether 300 pips or 400 pips. I'll just be watching the market until I see a bullish reversal pattern. I would not exit the trade. That is how I exit my second trade, CPE2. Sometimes I let it run for 300 pips, 400 pips on gold. Okay? So that's my take on gold. Gold is bullish at the moment. Gold is bullish at the moment. I would only consider selling gold if this support is broken or price test Fibonacci 50% level or fills that fair value gap, the buy side imbalance. That is when I will consider selling. Comment. I also want to recommend. I'm sorry for the break. Someone is trying to reach me. Sorry for the break. So that's it for gold. For those of you who are here to like the stream, do that now so that others can get to see this video. You are getting value from these streams. Let others also come and get this value. Like the stream, it costs you nothing. You're getting this value for free. You're getting this value for free. The things I'm teaching you, some people pay thousands of naira to access them, but I'm giving it out for you, giving out to you for free, Some people pay thousands to access this information I'm sharing with you guys. So liking the stream shouldn't cost you anything. Click on the like button so that others can get to see this video. Do that right now. So Euro Aussie. Someone said we should look at Euro Aussie. Can you all hear me? Can you hear me? I want to see your comments. Can you hear me? Okay, Euro Aussie. Let's start with the weekly. My bias for Euro Aussie this week is bullish. Okay, my bias for Euro Aussie this week is bullish. I can see Mr. Kristen, Mr. Raphael. Okay, so my bias, let's see. This is the weekly. Now, on the weekly, first thing I will do here is to identify this fair value gap. You can see this fair value gap. Can you see this fair value gap? I think that gap has been filled, right? This gap has been filled right now. Can you see it? The gap has been filled. The gap has been filled. And last week candle closed as a spinning bottom after clearing liquidity at this previous low. You can see it has cleared liquidity at this previous low. A spinning bottom formed, right? So after the formation of a spinning bottom, we're supposed to wait for this week candle to close bullish before we buy. But as day traders, we cannot wait for the weekly candle to close. We want to make money, right? We want to make money. So we need to switch down to, after the close of last week candle, what pattern do we have on the daily time frame? Let's go and see if we had a bullish reversal pattern on the daily time frame. Okay, let's go to daily. So on daily, you can see the pattern we have here is a bullish reversal pattern, right? Yeah, it's a bullish reversal pattern. This was Thursday, this was Friday, and you can see the pattern we have here. This is an hammer. Can you see this? This is an hammer. This tells me that Euro Australian dollar is set for buy. is set for buy. Now, after the formation of this hammer, let's see if a fair value gap was created on 4 hour. Let's go to 4 hour. What do we have on 4 hour? So on 4 hours, you can see a fair value gap was created on 4 hour. Am I right? Yes. Yeah, this fair value gap was created on 4 hour. Can you see this fair value gap? Okay. So that gap got filled yesterday. No, sorry, today, this morning. This morning, you can see that gap has been filled. Can you see it? And after the gap got filled, what happened? An hammer candle formed. You can see an hammer candle formed. Can you see that? So this is a bearish hammer. So before we buy, we should wait for the next candle to close bullish. So if the current 4 hour candle closes bullish, you might want to consider buying Euro Australian dollar. Okay, you might want to consider buying Euro Australian dollar. Now, after the close of this previous 4 hour candle, let's see the pattern we have on 1 hour. If you don't want to wait for the next 4 hour candle to close, okay, so 1 hour has already confirmed bullish reversal pattern. So you could take the risk. But remember, on 1 hour also, we still have some fair value gap here. You can see we still have this fair value gap that is yet to be filled on 1 hour. So if you are going to buy from the current market price, your stop loss must be below this fair value gap, which has to be few pips below the low of this candle. That's my take on Euro Aussie. You can take a buy now, but ensure that your stop loss is like 20 pips below the low of this candle, because they are likely going to still push price down to fill this fair value gap before going bullish. So for this week, my bias for Euro Aussie is bullish. For today's market, my bias for Euro Aussie is bullish. But like I said, they might want to push price back to fill this fair value gap before going bullish on Euro Australian dollar. I hope that is clear. I hope that is clear. If I'm to take any risk on Euro Australian dollar now, it has to be a buy. It has to be a buy. And if I'm buying, let's say from the current market price, let me go back to 4 hour. If I'm buying from the current market price, this would be the best area to use as my SL. So let's calculate the risk. If I'm buying from 6107, which is the current market price, and my stop loss will be at 6026, that's about 80 pip risk. 80 pip, yeah, 80 pip risk. And if I'm risking 80 pips, we still have area of imbalance here that need to be filled. So this area will be my first target. Or let me apply Fibonacci. Let me go to daily K. So apply Fibonacci from this. Let's just take it from this swing high to swing low. So if I'm risking, let's say I'm risking 80 pips. Okay, if I'm risking 80 pips and my first target is at this equilibrium, let's say my first target is at this equilibrium, that's 6226, that's about 140 pips. That's a good risk reward, right? That's a good risk reward. Risking 80 pips for 140 pips. That's a good risk reward. Okay. So initially your risk will be as high as 80 pips. As the market starts moving in your direction, as you start making profits, let's say you make 40 pips, you adjust your stop loss to from 80 to 40. Are you getting me? You trail your stop. If you make 40 pips, you adjust your stop loss, deduct that 40 pips you've made from the initial risk you took. So your stop loss should be adjusted to 40 pips below your entry. When you make 80 pips, then your stop loss should go to your entry. Or when you make 60 pips, you can move your stop loss to your entry. Are you getting me? So that's my take on Euro Aussie. I think Euro Aussie today is bullish. Okay, it's bullish. It is bullish. And Euro Aussie is negatively correlated with Australian dollar USD. So like I said, this week, Australian dollar USD should be bearish. Australian dollar USD should be bearish. Euro Australian dollar should be bullish. I hope that is clear. I hope that is clear. If it is clear, type clear, type clear, type clear in the comment section. If that is clear, okay. I have a course on concept of liquidity, resistance and support, fair value gaps. If you want to have access to the course, today, if you want to have access to it for just 10,000 naira, you have access to the course. Okay, you learn resistance and support, liquidity concepts. You are teaching that course my strategy, the things that I look out for before I buy or sell. Okay, it's in that course, it's detailed. Okay, getting it today is just for 10,000 naira, 10,000 naira. And with that, you have access to my private WhatsApp group. Okay, before I come online, I've already told them what they should expect in the market. Some of them have already executed their trade already on gold. I already shared with them on the group, and we do meet at least 2-3 times in a week. Zoom session, and it's during the Zoom session I attend to all your questions, all your trading questions is attended to during the Zoom session. Like I told you guys, by next month, I would be sending signals for gold. For those of you who like to trade gold, make money trading gold. All you need to do is fund your trading account with Cabana Capitals with a minimum of $500. $500, and you would have access to the gold signal. The gold signal. You can rest assured that you will make money following those signals. Okay, so that is it. If you want to know more about trading, how to analyze the market, how I analyze the market, my unique approach to the market, then you should just get the course for just 10,000. 10,000. Okay. Any other question? Any other question? Can you hear me? Can you hear me? Can you hear me? Can you hear me? Is there any other pair you want me to analyze? Please drop it in the comment section. If you are yet to like the stream, please do that now. Do that now. Any question? Any question? Any question? Do you have any question? Any question? Any question? Any question? Can you hear me? Can you hear me? If you can hear me, type yes. If you can hear me, type yes. Okay, Mr. Laughter. Okay, okay. Is there any other pair you want me to analyze? Okay, someone say USD Okay, let me see USD CHF. Okay. USD Okay. So I think that will be the last pair. USD Oh. USD Someone is saying this is old stuff. Whether you're trading ICT or not, the main goal is for you to make money. Are you making money with whatever strategy you're trading with? That's the main thing. Are you making money? It doesn't matter what strategy you're trading with. Are you making money? If you're not making money, just keep quiet. Okay? If you're not making money with whatever strategy you're trading with, keep quiet and listen to someone who is making money trading with his own strategy. Okay? I'm not here to tell you that my strategy is the best. Like I said, the goal is to make money. Are you making money? A lot of traders just like making mouth. You're trading ICT. How many ICT traders are making money? How many are profitable? Are you new to the game? I'm sure you just started trading. I've been trading since 2009. Okay? I've been trading since 2009, in case you don't know. So I know a lot of things than you. When did you start trading? You'll be newbie. Okay, let's look at USD CHF. USD CHF. Okay. USD CHF, let's see how weekly candle closed. Weekly, you can see, I don't have to tell you the trend. Last week candle closed as an hammer. I don't have to tell you the trend. Okay, so this is a bullish pattern, bullish reversal pattern. I don't have to tell you. You should know that. You should know that. Okay, I don't have to tell you. You would also see this fair value gap. That is the reason price pulled back. You can see that is the reason price pulled back to come and fill this fair value gap, and this gap has been filled. Can you see it? Can you see it? That gap has been filled, and what formed inside that gap? An hammer, which is a bullish reversal pattern. So it's likely they would come and fill this fair value gap. You can see this fair value gap that was created on the weekly. So if you are buying USD CHF, this should be your target. This fair value gap, they are likely going to come and fill this fair value gap that was created on the weekly. If we go down to 4 hour, we'll definitely 4 hour daily, we'll still identify a fair value gap, which will be different from this one on the weekly time frame. Are you with me? So it's an hammer. Now, after the formation of the hammer, I'm sure a fair value gap was created on the lower time frame. Okay, the fair value gap should be created on the lower time frame. Let's go down to 4 hour. Okay, let's go down to 4 hour. No, sorry, let's go to daily before 4 hour. Daily. So you can see on a daily, you can see the fair value gap that was created on a daily. Can you see this? You can see this. So it's likely they will push price down to come and fill this fair value gap. Okay. Okay, so let's go to 4 hour. Let's go to 4 hour. And you can see the pattern we have here. This is an engulfing pattern. This is an engulfing pattern. You can see that. So USDHF is bullish. It is bullish. You could just wait. Okay. You could just wait for price to pull back. H4. Let's go to H4. Okay. So this is the fair value gap on H4. So you could just wait for price to pull back and fill this fair value gap before you consider buying. Okay, that's my take. You could also apply Fibonacci. Apply Fibonacci. Can you all hear me? If you can hear me, let me know. Drop your comments. Apply Fibonacci from this swing high. Okay, swing high to this swing low. Okay, so wait for price to pull back to. You can see price is at premium now. Okay, price is at premium. Wait for price to pull back to discount. Okay, which is below level 50 before you consider buying. That's my take. Most times they might not fill this entire fair value gap. They might not fill it. They might just fill 50% of this fair value gap. Let's just assume this is 50%. If you want to know, just apply your Fibonacci from the swing high of this candle to the swing low to get the actual value, okay, or actual level. Okay, so let's just assume this is 50%. So they might just push price down to test this level before going bullish. Most times they will not fill the entire gap. Okay, so 50% of this candle is called consequent encroachment. Consequent encroachment. So if a bullish reversal pattern forms at this area, you could consider going bullish, and your stop loss should be few pips. Let's say 15, at least 15 pips below the low of this candle. I hope that is clear. 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 You have any other question? You have any other question? Any other pair you want me to analyze? Let me know. Let's look at UJ. I told you guys yesterday my bias for UJ was bullish. During the weekly market outlook session we had, I told you we should see pullback before we go bullish on USDJPY. So let's see USDJPY. What's happening on USDJPY? Price has been in a range. This is 4 hour. Kind of been in a range, but you can see this candlestick that formed here. The pullback, I think, was to fill this fair value gap, and that has been achieved. You can see this fair value gap. That pullback was to fill this fair value gap. Can you see that? So that gap has been filled. Can you see that? So it's still bullish at the moment. It's still bullish at the moment. Okay. And bias on UJ is still bullish at the moment. Let me see what's happening on 1 hour. Okay, it's been in a range from this point to this point. Okay, it's been in a range. So there's a fair value gap here. You can work with this. There's a sell side imbalance, buy side inefficiency. You can see this 1 hour fair value gap. So this should act as your resistance. Okay, this should act as your resistance. So if a candle closes above this fair value gap, okay, let's say 1 hour or 15 minutes candle closes above this fair value gap, you could consider buying. You should consider buying, and your stop loss should be few pips, at least 15 pips below the low of this candle. That is how I would trade USDJPY. Okay, wait for a candle to close above this area. I wouldn't advise that you sell now or buy. I would not advise that you buy or sell. Price is in a range right now. So my bias, like I said, for the week is buy. So I'm more interested in breakout from a resistance than a support, since I'm looking for a buy opportunity. So wait for price to close above this fair value gap before you buy. You could also, if you go back here, you can see here we had a fair value gap here. Can you see this? This is buy side imbalance, sell side inefficiency, and you can see is in confluence with this sell side imbalance, buy side inefficiency. Can you see? Can you see that? So if a candle closes above this area, then you should know that the buyers, we have more demand, more buyers than sellers. Then you should go bullish above that level. That's my take on USDJPY. I hope that is clear. I hope that is clear. I hope that is clear. So that will be all for today's session. If there are no questions, you have any question? You have any question? Is there any other pair you want me to analyze? Please let me know in the comment section. Let me know in the comment section. Can you hear me? Can you hear me? Type yes. Do you have any question, Mr. Precious, Mr. Raphael? Do you have any question before I end this session? Do you have any question? I believe you all can hear me. Any question? Is there any pair you want me to analyze? Let me know. So it seems there are no questions. Okay, I appreciate you all for your participation in today's session. Okay, we'll be meeting tomorrow. Okay, we'll be meeting tomorrow 10 a.m. Tomorrow we'll be meeting tomorrow 10 a.m. Okay, so I wish you all a profitable trading day. Like I've always advised, ensure you use stop loss on all your trades. Ensure you apply stop loss. Yeah, stop loss. Don't over leverage, and always stick to your trading plan. Even as your mentor, don't listen to me. Listen to you. Follow your trading plan. Okay, follow your trading plan. If what I'm saying on gold is buy, and what you have on your plan is to buy gold today, then you should go ahead and execute the trade. But if I'm saying buy and you are saying sell, and you are convinced that gold will be sell, go ahead, sell, but ensure that you have your stop loss in place. If you lose the trade, you will learn from that. Okay, you would learn from that. So always stick to your trading plan, because I might be wrong. Sometimes I get it wrong. Okay, so if you have a plan, normally before the market opens for the day, you should have done your analysis. After the close of yesterday candle, you should have done your analysis. You should have known the direction you're going to follow, whether to buy today or sell. Are you getting me? So me coming on YouTube here is to, okay, share my own thoughts with you. Does it align with your own thoughts? If it does, that tells you there's a high probability for the market to go in our direction. But if it does not, and you insist on trading your plan, there's nothing wrong in it. If you lose, you learn. Are you with me? So always stick to your plan. Be disciplined. Be disciplined. If you do, you will definitely make profits consistently from the market. Okay? Don't rush the market. Success in trading is not a sprint but a marathon. It's a process. Many want to jump the process, and that is why they keep losing money to the market. You cannot jump the process. If you jump, you will crash. But if you grow, you will remain there. Many traders don't want to grow, they want to jump the process. They want to jump the process. That's why they keep struggling in the market. You cannot jump the process. You cannot. Spend time on the charts. Okay? Spend time on the charts. Okay? So that'll be all for today's session. I appreciate you all for your participation. Do have a great day.